Hey everybody, welcome back to the channel. This is my Palantir Q1 2023 earnings thoughts and analysis from what we got. This was an interesting earnings. It is currently May 10th, 2023. I did the live stream today as I open the market every morning, and we hit 10:30 on the live stream, which was super awesome. We've come back down to about $9.70, but nonetheless, there's been some heavy momentum. Palantir was about 740, 770 right before earnings, and it is up around 25-30% at its peak, now averaging in at around 15 to 18%. Look, this has been an incredible earnings, and I have a lot of thoughts and a lot of things I want to go through. This is going to be a comprehensive breakdown of all of the qualitative things I thought about earnings that were really important and special, and the quantitative things that I liked, and also the numbers that I didn't like following this earnings report. Before I get into it, I just want to start off and give a shout out to the Palantir community. There are very few times on the internet where you can actually develop a community. And so what is a community? And I'm going to do a whole video on this as well a little bit later during the week. But a community is a group of people that have similar ideals and beliefs that can disagree with each other within the community, but have an overarching goal. And yes, that goal is for Palantir stock to go up, right? So we make money. That is a goal. But that's not a good enough goal to actually sustain a community. What sustains a community, as I look at the Tesla community, is a shared vision around the company you're investing in. At the end of the day, we are investors and we believe in a vision, and hopefully that vision creates financial benefits for us. And we want to see that vision play out. And all of us have different individual reasons for why we invest in Palantir, but I think at its core, this is a company that has a lot of unwarranted stigmas against it. We feel that it's been unfairly treated. We think that they have some of the most amazing technologies in the world. We believe they're really helping democracy, which if you're a Palantir investor, you're pro-democracy. And we want to see that vision play out. I think, our section of the internet, as I would call it, is the Palantir community, and I would characterize that as really YouTube and Twitter, because that's where we all pretty much hang out, is a small section of the internet, right? There's billions of people on the internet, and we're probably, I would say, a couple 100,000 people, and in that couple 100,000, maybe a couple of thousand, in that couple thousand, maybe a couple hundred that actively talk about this every day and really, get excited for these moments. But we have our little section of the internet, and it's really cool to be part of something that is growing, which one day might become a much bigger section of the internet because there's just going to be more interest in the company. And so if you're a Palantir investor right now, if you keep up with the content, if you're following people on Twitter and seeing the videos on YouTube, at this day and age in 2023, who knows what it's like in 2027, but you are here at the inception of what I think is one of the best stock communities on the planet outside of Tesla. And it's really fun to be part of that community and to hopefully play a helpful role in providing content and value. So having said that, let's get into earnings. So I'm going to start off with some qualitative things from earnings, and then we'll get into the numbers. The biggest thing that I saw from Palantir's Q1 earnings is the demand for AIP. Now, when the AIP platform came out about 4 weeks ago, me, along with many others in the Palantir community, thought that this was a really big deal. Imagine taking ChatGPT, which if you've used ChatGPT and played with it, you see how productive it's made you, and taking that to the enterprise and governments. What would it be like for a business to type in a question, for a government to type in a question, to be on the battlefield, to do a command, and then immediately get value, immediately get answers, immediately be able to know what to do? That is pretty legendary. It's pretty revolutionary, and it only happens if a company feels secure to give their data to the LLMs, the large language models that have to train that data in order to be able to then distribute them answers. And what Palantir's promises and what Alex Karp was talking about with customers is that the conversation has changed from do I need this to how do I use this? Because they are trusting that Palantir is able to provide not the AI product, but the AI infrastructure, which is different than a product. The infrastructure facilitates the capacity to be able to even implement this type of stuff, i.e. the data onto the LLMs, which then are trained to be able to give you business value in an organization. Palantir has IL6 security clearance. Palantir is one of the safest products in the world. Palantir actually cares about making sure the data is readable by some people in the enterprise and not readable by others, and so the technology is built with that at its core. I think there are very few companies, and this is what Alex Karp was talking about, that actually have the ability to be able to implement this at scale within an enterprise, within a hospital, or within a government. And because they've showcased that they've been doing this for 20 years, ChatGPT just created a new user interface to be able to actually enable the ability for this to be more human-friendly. It's getting big demand. And that's why Palantir's Alex Karp said that this is a product that they have seen more demand for in the past 20 years. And he also had something very interesting to say when an analyst on the earnings call actually asked about their strategy for the AI market. Let's take a listen to this.
Our strategy on AI is to just take the whole market. We have no pricing strategy. We're going to create a lot of value. We're going to get hundreds of customers, and we will price it as we go. One of the things we've seen over and over again is when you're ahead of the market, you need to take territory.
Okay, so obviously this was really cool. And the reason this was really cool is because he's like, look, our strategy is to take the whole market. And, you know, when a CEO says that, I believe him because he's not getting into the minutia of, well, we're going to do the blah, blah, blah. He's like, no. This is a very simple answer. We are ahead. There are certain moments in capitalism when you are ahead of your competitors and you take everything. And when he means take everything, he means every client in the world that needs an AI-based infrastructure to enable their business to become part of the 21st century, which is exactly what happened in the early 2000s when you needed a .com. You went to Google, you went to Microsoft, right? They built things for you. You used cloud services with AWS in 2006. This is why Shyam Sankar said last year, Palantir can be what AWS was for developers last decade. If this really does play out to the extent that we think it is, then there is no pricing strategy. There is take the whole market, get as much market share as possible, and really enable yourself as one of the best AI players in the United States. BP just released their earnings, and they said the price it took them to find barrels of oil went from $14 per barrel to $6 per barrel because they had better data-driven decision-making, they had better insights on where to drill, and they had an overall digital transformation that they credited literally to Palantir in their latest earnings call for helping them establish that digital transformation. Palantir should stop being seen as a black box by the industry. It is still seen like that to us that, you know, our shareholders, we understand what Palantir is, but I think to the far majority of people, it's still seen as a black box. If that changes, and I think that's what we're seeing with the sentiment in the price, then, you know, Palantir is going to start to do really well. So that's the main thing I saw from Palantir's Q1 earnings in terms of the qualitative analysis that I can give. AI and the demand for AI is huge. As a result of that demand for AI being huge, Karp and team seem very excited to take on the entire market because of their strategy for AI. And to be honest, I just don't think there's a better AI play in the market. Like, yes, there's Microsoft. Yes, there's Google. There's a bunch of great companies, but when it comes to a real AI play, not just something to help you sell more advertising, when it comes to something to transform businesses and enterprises, I think it's Palantir. Having said that, let's get into the financials. Now, I'm not going to go through every slide, but these are the main ones that I want to cover. GAAP profitability. I mean, look, this was the biggest thing that I wanted to see from my Palantir earnings predictions videos. I wanted to see us get GAAP profitable. They achieved GAAP profitability for the first time in our company's history last time, and they did it for a second quarter in a row. They also achieved $4 of income from operations. So it's not just GAAP profitability in general, but from their actual operations, meaning like the actual stuff they sell via their business, they put up a $4 million profit. $4 million is small, but nonetheless, it is a profit. Last quarter, they lost $17.8 million from operations. This quarter, they are profitable. You can no longer say that Palantir is an unprofitable company that's been around for 20 years. They are now a profitable company. And they have also said that they expect to remain GAAP profitable in each of the consecutive quarters following 2023, which means for the rest of time, right? Like they're going to be GAAP profitable, which means they're going to end the year GAAP profitable. Why is this so important? Because in order to get into the S&P 500, you have to be profitable for at least 4 quarters in a row. Palantir is basically all but telling us, hey, we're going to get into the S&P 500 by early 2024 because we are going to have the biggest requirement, which is GAAP profitability, taken care of. So this is a very big deal, and this is also why I think people are starting to buy the stock, because if they're going to be in the S&P 500, then all hedge fund managers, institutional investors around the world are going to have to own a little bit of Palantir since it's going to be part of the S&P. So as a result of that, they might be saying, hey, let's just buy it now and get it over with. U.S. business generated $337 million of revenue. U.S. revenue growth is amazing, and we are seeing that U.S. commercial is growing, as Alex Karp said, as a weed, up 26% from 85 million to 107 million. Governmental growth from 188 million to 230 million dollars. Look, the growth is not 60, 70, 80%, but if they can do this quarter over quarter over quarter, they are on track to continue to have 67%, which is what they had last year per year of commercial revenue growth in the United States. Government revenue growth is, you know, it CAGRs at around 30% over the last 10 years. Some years it's good, some years it's not. It really depends on budgeting and you know, politics, honestly, from the DoD. But the fact that Palantir is getting U.S. commercial under control is the big thing. One thing I do want to say is when Palantir was mainly a government business and like 60% government, 40% commercial, everyone was like, they're too reliant on the government. Now that that is switched and the fastest growing part of their business is U.S. commercial, everyone is too concerned that they don't have enough governmental growth, which is just insane to me. Like at some point, U.S. commercial is what this is going to really allow it to get exponential scale, because there's unlimited amounts of business that could use this product. So that's where, if I had to bet to see the company grow, I would want it to be U.S. commercial. I wouldn't want to be the government. The government's not going to let them fail. The government is always going to be sticky revenue, but I want U.S. commercial to grow 60, 70% year over year, which it's on current pace for. because that's going to be the main driver of the business. Government revenue growth overall, 20%. Commercial revenue growth at 15%. Total revenue growth, 18% quarter over quarter. Average TTM revenue per top 20 customer, 14%. Now, let me deal with average TTM revenue. This is really good because that means that the product's working, right? The companies that are paying them are making on average $51 million a year, which means not only is the product working, but it means that they have the money to be able to afford to buy Palantir, because if you're spending that much money per Palantir, then that means that the product is good and the product is affecting your business. Yes, we want to see them go towards more mid-sized and smaller businesses, and hopefully, and there are some slides in this deck that are going to show that they are attempting to do that, but because the product is so sticky, so good, and so strong, we are seeing the average revenue per top 20 customer continue to go up. Total revenue growth at 18%. Now, look, guidance is about 17% year over year. We really did beat guidance on Q1. We said we were expecting about 506 million. We beat it by 19 million, brought in 525. I do think Palantir is sandbagging. I think with the NHS deal, and I think with the demand for AIP, that again, Karp is saying we are having hundreds of conversations with potential clients, which means that demand should ramp up pretty significantly going into Q4 when most SaaS deals get done, software as a service, right? Most enterprise deals actually get done around Q4. I think we are sandbagging the numbers for 18% revenue year-over-year growth, and I think at minimum we'll get to 21, 22, if not more than that. But if we were able to beat that well in Q1, and you believe Alex Karp when he says demand is high for AIP, it is just a question of how well can they execute and sell this software. And if they do it quickly enough, then I think by the end of the year we will more than break 18% year-over-year growth, which I think we will do. Net dollar retention, as you can see, they're hiding it right there at 111%. It's not the best. I think it was like 124 a couple quarters ago, then got to 115, now at 111. Look, in a struggling macroeconomic environment, I understand why NRR is going down. I can't really be the most upset about them for that. Overall, I think there's more positives than negatives. That's not the best number in the world. Hopefully that number starts reaccelerating. But in this environment, I mean, you want to get what you want to get, right? We might actually be entering into a recession soon. So I'm just happy the fact that we're able to grow how we're growing. Commercial customer count up at 280, and total commercial customer count grew 41% year over year in Q1 2023. That's a really good number, man. It's hard to grow your commercial customer count. One of the things people say about Palantir is that Snowflake has thousands of customers, Palantir only has 340. Yeah, but you got to look at the rate of growth. Now we're at 391, and we are up 41% from this time last year. So, I mean, in terms of the rate of growth, it's pretty substantial. If we can keep that up over the next couple of years, we are going to have thousands of customers, and I think eventually there will be an inflection point with AIP where that total customer count grows even larger than it is right now. This was a big one. Total contract value, 60% up from 248 to 397 million. That's a big deal. Like, the fact that their total contract value and their billings is up 25% means they are collecting so much money. They are putting it in their books that they are able to get these contracts to be even more valuable and valuable as the revenue is coming in. And that means clients want to pay them more because they're using the product more. They introduced pay as you go a couple of quarters ago as well, which is probably helping them collect a lot more on the top line for the total contract value and for the billings, because that means customers are able to easily pay as they're using the product, at least small or medium-sized businesses. But I mean, this is one of those things where it's like you look at this and you realize why the stock is up. Like, when you're increasing your TCV by 60% year over year, you're doing something good as a company, and the product has to be working for some people. Now, this is one slide that I really liked. During Q1 2023, we closed 64 deals of at least 1 million. 22 were 5 million. 8 were 10 million. These are not the 30, 40, $50 million deals that they're closing with the Fortune 500 companies. These are smaller companies. These are companies that are just small enterprises, right? They may be doing maybe 20, 30, $40 million of revenue a year, so they have the ability to afford a $5 million, $10 million deal with a software company, and Palantir is getting those deals done. Last quarter, this was 55 deals, so it's up about 9 deals from Q4 2022 of at least $1 million, which means they're going down to smaller, medium-sized businesses, which is also a good thing. Adjusted gross margin, 81%. This has been pretty stable. This is really great. Here's a big one. We ended Q1 2023 with $2.9 billion in cash equivalents in U.S. Treasury securities with no debt. This was $2.6 billion last quarter, so this is up $300 million. Their cash from operations is $187 million, and their adjusted free cash flow is $189 million. If that averages out over the next 4 quarters, they're going to pull up $800 million in adjusted free cash flow, which, look, if you look at Q1 2022, it was $30 million. It's up quite significantly in Q1 2023. It's just a question if they can keep that going. And that's really because Palantir has got more fiscally responsible. They've decided to do the things that they needed to do to be able to cut where they need to cut, especially with stock-based compensation also coming down, that we'll talk about in a second, that they've been able to get to where they needed to be in terms of getting that adjusted free cash flow. The other thing that's really important here is that the $2.6 billion they had, I don't know how much of that they put into U.S. Treasury secretaries. I think it was about a $1.5 billion, which netted them about $17 million in profits. But Joe Lonsdale said that on a Fox interview that they have $1.5 billion in U.S. Treasury securities. So people were saying, why don't they buy back their stock? Well, that's because they were getting a pretty decent return on their money just being in short-term treasuries. And I'd rather have them get that 3.3 or whatever percent it was than buy the stock, even though eventually I would like to see them do a buyback. But for now, get that return and then put it on your balance sheet and get to GAAP profitability. That's the most important thing in the world. Adjusted, representing a margin of 24%. So Q3 2022, this was the worst quarter they had in a while. Their operating income margin went down to 17%. Probably they were just scaling up hiring, a little bit more stock-based compensation stuff, things of that nature. That has started to come and become more normalized at around 24% or $125 million. Now, Q2 2023, they expect 528 to 532 million. They put up 525 million, so pretty much 0% growth quarter over quarter. Are they sandbagging? I don't know. Q2, even if it's not amazing, I don't care. I care about Q3 and I care about Q4 because that's when I think AIP demand for even the beta version of their product is going to start to hit some, better scale. So Q2, it's not going to be amazing, but that's okay because it's just one of those quarters for SaaS businesses where, they just have to get through it and then eventually get to a better level. GAAP net income for Q2 and adjusted income of operations from 118 to 122 million. Revenue still at 18% year-over-year growth, 2.185 billion, 506 million adjusted income from operations, and GAAP net income in each quarter, which will lead us to getting into the S&P 500. As you can see, stock-based compensation in Q1 2023, we're at around 91 million, which is not bad at all. It is decreasing, as you can see, from 111 million, 112 million, 105 million, 106 million actually went up Q4 2022 to 91 million in Q1 2023. If they can maintain that route, which I don't know if they'll be able to, because, later on in the year, they might have to pay a little bit more for their sales and for other engineers as they start to ramp up sales towards the end of the year. Stock-based comp may go up, but it seems like it's on pace to decline another 27% year over year, which is amazing because stock-based compensation as a total percentage of revenue is going to start to go down and down and down, which is what we need for Wall Street to get even more happier about the stock. Now, the number that I didn't like the most was international growth. We didn't see it too much in the deck, but Karp talked about it. International CAGR is just at around 10%. So the compounded annual growth rate of our international business is not good. And that's primarily because, from Karp's words, the rest of the world is not as quick to adapt in a software-centric environment, which is why the rest of the world doesn't really build the software companies that the United States builds. And as a result of that, U.S. businesses are more resilient. They're willing to attack. And David Glacier, the CFO, even said that U.S. commercial is what's going to give us our GAAP profitability as we're figuring everything else out. And because they're so stringent and strong on the fact that U.S. commercial is growing as it is, that's what's going to get them to be GAAP profitable over the long term. Alex Karp even said that they're going to cut employees internationally around the world if they don't see international growth, because they're just not going to keep those employees there or invest in those resources if that part of the business is not growing. I do think the NHS deal is going to be very important for us to get, because that'll establish a larger presence in the UK from the governmental perspective. When 70 million people have Palantir as their software for their healthcare and for their services and for their surgeries and for their weekly checkups, whether you know them or not, businesses around the United Kingdom and the greater part of Europe, as they see Palantir's version of the NHS becoming more effective, are going to be like, hey, can they do that for our business? So I think the NHS deal is going to set a good precedent for commercial growth and governmental growth internationally. But right now, we just don't have that. And that would be the biggest red flag, I would say, that exists in earnings. And again, 3 quarters ago, there were a lot of red flags. I mean, Karp said we wouldn't be profitable until 2025, right? That was a huge red flag. But outside of slowing international growth, which I think will inevitably get fixed, and even if it doesn't, U.S. commercial is what we really need to worry about. I don't think there's that many red flags in this earnings call. And I've looked at it, I've talked about it. Chris historically sold out of Palantir. He's back in. He says, look, they're profitable. You buy profitable companies that are growing. And to me, it makes sense to buy a profitable company that is growing, especially if you believe AI is the next frontier. And it's not Web3, it's not crypto, it's not any of the nonsense that happened over the past 2 years. It is actually something that is changing the entire world, and that every business is going to need to have an AI strategy. You want to bet on the company that builds AI infrastructure, not just AI products. And that's what Palantir is. We don't even know what Gotham, Foundry, and Apollo are going to look like over the next 10 years. I mean, there is just so much potential. Palantir also, without having to acquire another company, created a new product internally because they had years and years of research on how to be able to do this, put a fancy user interface on it, and then offered it to the world. This is one of those products that I think is really going to get Palantir to another level, but we've got to put up the growth. And if we can put up the growth, then it's going to be a good story. All right, those are my thoughts on Palantir's Q1 2023 earnings. Let me know if you have any thoughts below, and I'll answer them in the comments. Overall, it was a pretty awesome earnings. We'll see if we can maintain momentum. As I'm recording this video, I'm checking the stock price. Stock price is at $9.88, so holding strong at above $9.80. We'll see if it continues to do that. To be honest, I am a bit skeptical we hold at this $9 range because at the end of the day, you know, Palantir likes to come back down, but the price targets have increased by various analysts. Bank of America put us at 13. A couple of others increased us from $7 to $10. So if we're averaging around that $9 to $10 price target range, and Wall Street thinks, hey, this company is definitely going to be the S&P 500, AI is growing, they have an actual AI product that is able to allow them to grow, then maybe there's a real story here to maintain some momentum and then eventually go on and grow from there. It's really fun to cover a company that's doing some pretty awesome things, and I'm just excited to be here and to cover the company, and I hope you guys continue to get value out of the coverage. Thank you guys for watching and listening. Let me know your thoughts in the comments on what you thought about Q1 earnings, and I'll see you in the next one.
That, baby. Look at that. That looks very sexy. That's all I'll say, okay? That looks very, very attractive. You know, there was a girl I saw in high school. I was on the bus with her one day. I told her dead to her face. I said, you are the most beautiful girl on the planet. This is a true story. I'm not making this up. She looked at me. She said, Amit, don't say that because one day you're going to find a girl that's prettier than me. I said, no. You are the most beautiful girl on the planet. Was I trying to sleep with her? Absolutely. Did I end up sleeping with her? Absolutely. But nonetheless, I did believe that at the time. But she was right. Because I found a more pretty girl, and I'm looking at her right now at $9.80. This is the most beautiful girl on the planet, ladies and gentlemen. There we go.